All right, what's up, guys? It's been what, like 2, 3 weeks now. Kind of took a little bit of a break, especially now with the cohorts being finished. Um, like I said, usually whenever I finish these big projects or like just anything, I guess that I've been doing for like I guess for a couple months now, I like to take a little break, like just kind of recalibrate, chill, um, figure out what's like the next plan, and then kind of just go from there. So now that that's done, I have a couple of things that I'm gonna do over the next couple of weeks or so. Like, I mean, honestly, if I really like sat down and did, I think I could probably get most of this done in a weekend. But the plan is like, well, I want to finish this. This is like the one thing that I'm mainly focused on right now is trying to figure out the best settings on uh how to code POIs, right? Buy to sell to buy, and it's all based on solidified points. But the solidified point indicator, like I don't think I'll like share that. I don't know. I just this is kind of gonna be like my base to make all indicators or all like scanners eventually. Because I really would want to have a scanner by like the end of next month. Because obviously if I want to do like OFD, then I need to first do POIs. Then when I do POIs, I gotta figure out what from a solidified points POV on the chart, like what would dictate a reaction, and then what would invalidate the reaction, and figure out the rule set, like kind of just that's like consistent across the board, not just like per scenario. Um, but yeah, it shouldn't be too difficult. It just takes like a lot of repetition, like a lot of loops. Like I'm already on version 22 of this indicator. You know, and it might take me like 50 tries to get this done fully. Um, just changing up settings, adding new perimeters, adding new rules. Like that's like the problem with like trying to automate the stuff is like what you don't know that you see. That's kind of like the hard part. But yeah, from there, I do want to finish these. For the people who have the direction indicator, I've now released version 2. This is like version 2 now, where we made biases time frame independent. So, or I mean, well, pretty much separated everything. Like, there's no longer like minor intraday is not considered like two time frames now or stuff like that, because and the scalp is also not considered two different time frames, because I was kind of leaving a bit of room for error. Because, for example, if there's like two time frames on one setting, which would be like the scalp, then technically like that one could be unbiased, but there's no other way for other time frames to be unbiased. Um, but yeah, the this is now like all time frame independent. Like this is now you could add like 10 different time frames on here. And then based on those time frames, you can obviously choose whatever you want. And also, I did add like a bunch of highs and low settings. Like for example, high of day, low of day, previous H1 high, low, H4 high, low, daily, weekly, monthly, yearly high, low, daily close, previous daily close, sorry. Today's daily open, new week open. These two are kind of repetitive, but it's kind of personal preference. But yeah, if you guys have the indicator, the V2 of this indicator, please let me know what you guys think. And the next step to this now, like I said, is going to be POIs, which is this. So I was like kind of testing things out yesterday. Look, like this is like I had this trade idea yesterday. I didn't really trade it, but I just like, you know what? Let's put it to the test, you know? Like this looks really good. Whoops, the wrong one. Why is it not copying? Hold on. Oh, okay, that makes sense. That makes sense. Okay, here you go. So this is like yesterday, and I was like kind of just looking at this now. Like this is kind of like what I want it to be. This is like kind of the first stage of what I want POI indicator to be. And let me see, where's my zoom? So obviously this is like a very clear buy to sell, right? Very clear. And that's going to be like the biggest thing with these indicators is like I can give it the rule sets, it can follow the rule sets, but there's always going to be that bit of intuition that I probably lack to code or have not been able to code yet, but maybe in the future I can. Where what differentiates this as a much better zone than this, and there could be multiple reasons. Like it could be more reasons than what I state right now, which is like obviously the duration, um, the placement. Like maybe this on a higher time frame is a different placement, stuff like that. You know what I mean? But this is like a very clear POI here, and then so how I see as something to be clear, then that would be like the advantage of using indicators like this. Whereas now, if I have the POI indicator and I'm able to know that, oh, okay, this looks like a very valid zone, then that could lead to like an idea. You know what I mean? And that is actually working out right now. See, so a work in progress, but but yeah, you can see there's even like a little transition here, right at 9 a.m., which is like 2 hours after New York Open, and then there's like the transition here. So this could have been like a somewhat of a decent idea, and from there, you just kind of take the position from there. So this is a work in progress. I want to have this. I want to have like a workable version. Maybe by I don't know, give it like a week or two. And then starting next week, I'm also going to get back to doing the case studies. I've kind of taken a break from that too. Other than that, for the people in here who are in cohorts, what did you guys think? Like, I know some people wanted me to kind of maybe do them once a month, but like cohort 1, 2, and 3 are now done, and like that's kind of like that would like if I'm gonna put them together and sell them together, like that's like kind of like course V3 if I was to do that. You know what I mean? So like if course V3 is there, then I would have to maybe do something shorter, which would by default make it cheaper, which would be like specific topics rather than general topics. Like, oh, what the, see, like cohort 1, basics, cohort 2, the models, cohort 3, the process, everything in between, the gaps. And like all those are done now. Like I just haven't put them together yet. And I'm probably gonna do this through WAP if I was to, but if you guys were to want to see like another cohort, let's just say maybe I don't know, either end of next month or it would be like I would skip this month entirely and do September or something like that. Like, what do you get? What do you guys think would make sense for another cohort? Considering we kind of touched up on like everything. I'm not answering that, bro. I'm not answering that. Yeah, like
I mean, we
the
kind of touched every topic.
uh-huh. Mm-hmm. Like it would have to be like
So I really don't know,
emphasis, right?
but
It would have to be emphasis on something
I don't
specific.
know.
Yeah, like I think it would have to be like emphasis on like very specific topics. So like I don't know, like I don't know what that would be. Like the only thing that I'm still that the only thing that's left to set up is like the live trading, which would be like Tuesday, Wednesday, Thursday. But that's like separate from the cohorts, that's but yeah, I don't know. I don't know where that leaves this year. Maybe um I don't know. We'll see because I touched up like almost every single topic. At least everyone that I could think of. I think I've touched every single topic. Yeah, maybe yeah, in the future for sure. Like the only other thing that we can try to figure out, but like I don't know, I don't know if I could charge for this because like I'm not an expert in it. Is like uh trying to trying to make indicators of all this stuff because like it's very difficult. Like it's very difficult to like make indicators of all this stuff. Like especially anything that's not like a linear idea. Like for example, coding coding weekly, daily highs and lows. That's very straightforward because it's the days or the weeks or the months, high or low based on time and price. That's very easy to code. But like when it gets a little bit more complex with like buy to sell to buys, it's like the rule says it's obviously based on solidified point. It's when you see internal structure, um, it's pretty much internal structural ranges that either fail or break that are then inverted as POIs in the future. But that's a lot more complex of an idea because like if you put like solidified points on the board, right? Like it's different to say, like here you see L2, L3, L4, but then here it's like L2, L3. You know what I mean? Does that make this more valid because it's a higher level than this? Not necessarily. Not necessarily, because it depends on the type of position that you're looking for. You know what I mean? So that's where like there's a lot more nuance to it. And then after that, okay, a POI is then valid if it reacts. So like the reaction here would have to be here based on this time frame, right? For the reaction for to make this entire POI valid. So now how do you define that is like now another issue. You know what I mean? So like the only other thing that I can think of that is completely untouched is um how we will um how we will approach potentially automating this stuff. But I can pretty much build almost anything if it's like a simple idea, if that makes sense. Is it lagging? It shouldn't be lagging. It should not be lagging. It's a bit laggy. You know what I'm gonna do? Give me a sec. Hold on. Let me close this stuff. Here's what I'm gonna do. Hold on. What about now? What about now? Um, just hold on. The problem now. Oh, that didn't do anything. Hold on. Okay, here we go. Bit better. Yeah, the problem now is when I narrowed that issue down to having both monitors on. So like if I turn off a monitor, it apparently uses less RAM. It's weird. But I'm waiting for these new Mac Minis to come out so I can get a new one. Um, but yeah, the problem now is like, okay, no, never mind. I think we're fine. I think this is fine. Okay, so we're good now. Better? Okay, cool. Okay, that solves that problem. So I just got to turn off my other monitor while we do the zooms. Um, cool. Perfect. Like this is good. Yeah, it should be fine, right? The only other solution I think I could do is use my laptop because my laptop is a better computer than my Mac Mini. Or if you guys want to do some research for me and like tell me what's better than Zoom, because I tried other solutions and it's not as good. The quality might be fixed, but the experience is just not as good. But yeah, the like I said, the only other thing I can touch up on is potentially trying to automate this stuff, but like it would have to automate like other things outside of RCV if that makes sense. Like I'd have no idea what else I can add. Like for example, when I found out that you could add highs and lows of X ranges or X times of the day or days, weeks, months, etc. Like I added that to this indicator in literally like a day because it was very straightforward to code. And then I just have to refine like little things that take like another within a week, all this was ready. You know what I mean? And then because of this update, then I also made this update, and that's what came forth V2. You know, so when it comes to coding and all this stuff, it's not necessarily difficult to do, but it is difficult to figure out what is codable and what and the rule sets for them. That's probably the hard part. Cool, but yeah, outside of that, I'll try to do the I'll probably try to add all the cohorts into one thing, and then from there, if anybody wants to get those, then I'll have like a solution for that. And then with the live trading stuff, I only have one problem that I need to fix because I want the live trading and the case studies to be together. So I have to like upload like all 63 case studies, you know what I mean? And I have to make descriptions for all of them and um and have chapters and all that stuff, you know what I mean? So like that takes a bit of a time. So hopefully I can like sprint through that like this weekend and then have everything working, and then I need to figure out whether the stream should be on Zoom or if they should be on WAP. But yeah, there's just some little problems before I can start that. And yeah, other than that, any questions with that, or should we get to today's call? All I'm gonna do today is just do a full-on review across the board. I only took like maybe one position this week, two positions this week. I lost in the win. I don't know if I still have it on here. I think I deleted it. Yeah, no. So I took like an immediate short here, but but yeah, I'm not gonna talk too much about that stuff today.
You're not gonna show your trades of the week?
No, I'm not gonna show those trades this week. I want to do a full market review today and then get into case studies and then go into stuff like that.
Sounds good.
Let me hide this. Um, yeah, because I also haven't done any case studies too, so I definitely wanna catch up on what's been happening and then where we're going from here. Because, for example, we can obviously start with dollar, right? We've been talking about this for months now, guys. You know what I mean? And we're finally starting to see this kind of come into fruition, and now it's a bit of a weird spot. What I mean by weird is because it always becomes a little difficult to trade something if if we start to sweep these major highs and these major lows, because obviously you know that from a intraday perspective, if we sweep a daily low, it may not be ideal to short immediately. Just it's the same concept with targets, and then us looking at, for example, this accumulation here, right, that we've been talking about for months. It's literally like back here, right? Don't need to we don't need to come back into that. We've talked about that over various calls, but now that we've seen the spring come into play, the test, the last point of supply, and then it's now starting to carry through. It gets a little weird now because from a Wyckoff perspective, like technically we shouldn't see that big of a retracement and we should see like more expansion, more move to the upside. But obviously, I don't like to copy paste the schematic onto the chart. That's not really how I like to do things because it's not always going to do everything by default of the schematic. The schematic is just an idea. So obviously, from a structure perspective, we would more than likely want to see maybe something come tap previous structure, continue higher. But it can get weird if, for example, from here we shut this daily low. Now next week we start coming into to sweep this green line here, which is a very important high. You know what I mean? Because this is a high from 2025. Yeah, 2025, May 2025. So if this is to now sweep and start coming lower, then that provides an opportunity from an intraday POV to want to trade short, obviously, within caution. But we've seen this before where we see that target be met and then we start coming back, and then maybe we see like a transition which would then propel us higher, which is exactly kind of what happened here. Not perfect. That's kind of what happened here. Sorry. Happened here, where we were a bit confused on the sweep here, because obviously the sweep causes to go lower, but obviously even though there is lower movement, there was positions to be taken in the opposite direction. Eventually it didn't sweep, but we ended up seeing the transition again here once we broke that, and then that's kind of what propelled us higher. So we could see two scenarios: one where we just come back next week, tap this, and then this would be like kind of this type of candle, like a hammer on the weekly time frame, and then we just see like some recovery in the daily, or we see some type of sweep, and then we potentially come lower, and then we hopefully get a transition to then go higher, right? Or obviously this could just like, moon, which is kind of the bias. It's kind of what we've been looking for now. So yeah, it's really cool to see this move come into fruition, especially after all that we've talked about it and all the checkpoints that didn't make the most sense always, and seeing this, for example. Whoa, oops, sorry about that. Did not mean to. So that'll be fine. Anyways, the right, seeing this pretty much come from here, where we were still talking about how this was bearish, and then we still saw this potentially go lower. But we knew that the narrative was potentially to go higher. Now you guys see the nuance of anticipating a higher time frame play, even though the internal doesn't align yet. So this is a great just overall lesson that you guys have been able to see over time. But yeah, with DXY, three things can happen. We either just go straight shot, we come back, retrace here, or we react, have some type of manipulation, and then we have to wait for a transition to then go higher. And just three scenarios. Same thing goes for EURUSD, obviously. But the difference with EURUSD is that we've already swept, right? I think this is the identical point, maybe? No, it's not. It's not. No, never mind. We're so far away. This would be like the identical point to that. So obviously this would be a longer term target, right? And this would be like a medium term target. So it's the same thing here. The problem now is going to be how we're probably going to close like this for the week. But the problem is that although this is technically now bearish, we are now seeing equal lows be swept, which is kind of like the same deal here, even though they're not equal because there's like a divergence here. But with EU, there is equal lows here. So that doesn't mean that we're looking for the reversal to go higher. That just means that we could be potentially seeing maybe this week's weekly high be swept before we go lower, which ties to one of the scenarios that we talked about with EU, with DXY, sorry. So yeah, pretty much the same thing with EU. This is pretty much bearish now, in my opinion, especially because we have the structural range intact that broke that internal low. So technically, I am thinking we are bearish on this note. GU, same thing. But this one is a lot more indecisive for the week, which is not bad because that makes me lean more towards seeing this come back. And let's go to the daily, stay on the daily. Right? It makes me want to lean into hopefully seeing this, right, come back and tap the previous monthly low. But the problem with seeing this potentially come back and tap this previous monthly low is that it is June 26th now. So because it's June 26th, that means that the monthly maybe closes on Monday. I think it closes on Monday. Yeah, I think it closes. Yeah, I think it closes on Monday. So, or Wednesday. Sorry, it closes Tuesday going into Wednesday. So that can be weird because if we are to start to come back higher, then the monthly could be a bit indecisive. Although I don't think it'll potentially go that deep. I would much rather like to see this closure stay as it is now. And then that would mean that we can potentially have the next month candle be an inefficiency fill. And then that inefficiency fill would then propel us obviously to the next target, which would be here. So from a medium term perspective, we have to assume that we're still going to go lower with target being here. Right. So I'm pretty much not gonna have to wait for Wednesday, see how these monthly closures close, and then from there see what can happen, because obviously this could be weird and like give me a reaction from here and then give an internal break, and then it gets a little weird because technically there could be a POI here. Let's actually go ahead and see if there is potentially something there. I mean, there's an inefficiency fill here, so that could be, you know, weird if it is to react from that, and then next week's closure could be a bit weird. So from the continuation standpoint, it doesn't really make much sense to me right now. But let's see. But obviously this could just continue lower because we're probably within like a 70 range ish. Yeah, so I'm still assuming that this is going to go lower. I don't have any reason to not assume so, especially if today wasn't Friday. Like I would probably want to look for the continuations later tomorrow. But obviously it's Friday, so we won't be seeing anything until Monday. But yeah, as of now, internal structure bullish. So if we were to see maybe a one tap up and then see a transition, then hopefully I would see lower pricing on that. Hold on, guys. Hold on, give me 1 second. All right, cool. But yeah, that's that. AUNU. I'm a little annoyed about these because these were actually crazy trades that I was not looking at too much. Um, Mainly because in AU is still a very decent long-term scenario. So if you guys recall, like maybe like 2-3 months ago, we had like a very big alignment with sweeps, right? Where we had the weekly sweep, right? We had the internal daily sweeps, and then there's obviously like internal sweeps that we're looking for, which would cause us to go lower. But unfortunately, that full target wasn't met. This is still now internally bullish. This is like what we probably looked at this like a couple months ago, but I'm seeing a similar scenario now with AU, and that's why I've been having some type of a bearish bias on this for like a while now. Because if we're looking at this now, right, let me go ahead and clear this up here. Okay, there. So from the daily POV, we clearly have a sweep here. Clearly have a sweep. And then there's obviously been an internal transition here, right? Where you can see by the high momentum coming in and then the internal breaks of structure. So therefore, my target is essentially this low, the range. And internally, there is also some sweeps. I just was not able to catch the opportunity here, which is, I believe, a couple days ago. I think it was this Monday, 2 weeks ago. No, it's 2 weeks ago. Yeah, so this is an internal sweep here, but the only reason why I also didn't like it was because of the high internal momentum. So if we see high to low once again, we did sweep. Go ahead and take off this. Right, we did have the sweep, and then from there we kind of had the internal continuations, which is what's propelling us lower. So now I'm very confident this is probably going to continue lower and meet our target here. But what that means on a bigger scale now is this is like probably now transitioning on a higher scale, because the problem with wanting to be bullish on this long term, even though we have high momentum, is the fact that we didn't break a previous high. So because we didn't break a previous high, like this could easily roll over in the long run. So clearly now, from a higher time frame POV, I want to see this low be swept. But if this low is swept with conviction, then we can now start to look at internal targets as like potential next targets for the next couple of weeks. But yeah, this is a great example of alignment across sweeps, but they may not have been tradable just because of the internal conditions, meaning the momentum here. And then once I saw the transition, it was a bit hard to enter now. So this one, if we are to see higher pricing, right, see some type of pullback, okay, then I'm very interested to see this go lower. And then obviously because of correlations, that would mean NU would also probably continue lower too. Right. Let's see. Yeah, we had a sweep here. This is kind of dumb. But from a daily POV, right, we're obviously looking for these previous lows. Yeah, so any type of recovery on AUNU will probably be the best opportunity across the board, just because EUGU or technically dollar has swept. So that could cause like weird price action for that, or is about to sweep, sorry. So now depending on how deep we go, then obviously we would want to see lower pricing. But yeah, other than that, gold is another weird one. Like personally, I want to see this go lower. But I mean, yeah, I definitely still want to see this go lower, especially after that closure. Like realistically, my goal here is to hopefully see some type of deep retracement back into the low 3000s. I mean, the lower the better, right? Because if we start to see these prices, I'm probably going to start buying gold myself. Right. And then the only thing that would cause me to change my bias is like, because we are technically compressing. You know what I mean? And like this is, I don't want to say this is weak order flow, but it's borderline weak order flow. Because although there are a lot of mitigations and there are a lot of highs being built, we are still seeing the delivery. So obviously my internal target right now is this. That's like my internal target. But if we get there, the only way that I would probably void that idea is if we start to see some disruption internally. And we'll go into smaller time frames, so what that would look like, and then we start to see the break of this high, because then that would be an internal sweep. You know what I mean? Internal sweep, and then the transition internally could propel us now to start, giving us this higher time frame picture. Because I've been bearish pretty much from here ish, but the target was met. So now the target was met, it gets a bit weird because now we're looking into dual sweep and then structural disruption internally. But yeah, gold's a bit of an interesting one because here, so like if you guys don't know, if you're looking at disruption doesn't, when you're in a bearish market, disruption is all dependent on the pullback slows. So obviously, if we start to see, right, any type of internal low be swept and then a high is broken, that's structural disruption, right? That's like the easiest way to put it. So if we start to see this, let's say, climb a little bit higher, let's say we create a new structural range internally, right? New structural range internally, and then we see the break of that low, then obviously that's the confirmed pullback of high, low retracement, right? But then if that's the break, then that's structural disruption. So that's what that could potentially look like. But obviously, I have no reason to assume this yet. But I'm saying that if that is to happen, then we can start to assume this is becoming a dual sweep, right? And then that would be the transition that supports the dual sweep.
I have a question.
Uh-huh.
Does the structural disruption has to happen in the premium of the or the discount depending on the direction of the
No, it does. It
structural
doesn't
range?
necessarily. No, not necessarily. Mm. I don't know if that would be considered a like something that makes it more or less probable. I to me it's just all about the structure internally. And the only thing that I would say can make it a better structural disruption is momentum. Like if the structural disruption is carried with momentum, or the confirmation of it is carried with momentum, meaning like we start to see the pullback be solidified, and then you see high momentum confirm the structural disruption, then that's what the only thing that would make it more high probability to me.
Can we have
Whether it
a
happens here or
structural
here.
disruption? Oh, sorry.
Yeah, if it's high or low, then I haven't really studied or like really referenced that too much. But obviously, if you're seeing like a deep retracement, that would mean more so that there's probably some high momentum. But I think it's all dependent on momentum more than the placement of when the structural disruption occurs.
Because we can have a structural disruption and then not break fully, like it doesn't fully confirm like that the range is gonna be broken out of. We can maybe
Yeah,
see
it
another
depends.
transition
Hmm.
above
Hmm.
and continue lower, even though we had structural disruption below.
Yeah, of course. They could do something like this then, and then that would offset the structural disruption because the structural
Yes.
disruption was meant to
Yes.
be here, right? And then see this propel higher. And if it doesn't do that, and then it does this, then it offsets that because you obviously got to play the transition that's like present at the time, the most recent move. You know what I mean? Like yes, you could say we've been. It's like the same thing with structure. Like if you've been seeing something be bullish on the weekly time frame forever, that doesn't mean that you're playing a bullish sense. If the internal structure is presenting better short opportunities, you know what I mean? It's like gold. It's like saying with gold on a weekly time frame, this has been fully on bullish, but we cannot play the bullish move without alignment internally. But obviously, the internal moves have been bearish because we have to play the moves that are current, right? So here, it's just like here, like technically from a current POV, this has to be a continuation to the downside, even though everything has always been bullish. So the point is that you have to play the recent move, the recent transition. You could see a structural disruption, but if then this has another transition, then you have to play the transition, especially if that then aligns with this. Because if the models are failed moves, then what happens when the model fails? Then you have to play the failure of the model because that's like the logic.
Yeah, so in terms of trade management, when you enter a structural disruption trade and then you see it a counter transition to your trade,
Mm-hmm. Mm-hmm.
you basically do you think your trade will still play out, or that just completely
No,
invalidates your trade and
I've
you
seen it. I've seen it more like that's happened to me before. It more I would more than likely should be playing this.
happens to me like a lot, and then
Yeah.
I'm sitting
Mm-hmm.
in the trade like is my trade will play out, or should I just get out because I had a counter transition against me with the direction, even though I'm trading an SD, which is counter trend.
Mm-hmm.
So you understand?
Yeah. So the
Like I wanted,
the the
what
the
do you think about that?
explanation, the only explanation then is like considering how many levels of structure are within a trend. Because obviously this is one level, then this is two levels, then this is three levels. So therefore, this transition, this SD, can also be like the CBOS of the internal range. That's the problem with trading the reversal. And this order, I mean, the structural disruption that's present could technically be the completion of the order flow of the move internally. And then you add on, let's say there's a POI here, and then you see the transition, then that transition would definitely offset the structural disruption model. And that wouldn't even be one of the core models per se.
Thank you.
Yeah, that wouldn't necessarily be one of the core models. I mean, it could be maybe it's like a OFD internally or a counter LGC or a counter SD to that move, which would then align as the LGC with this. You know what I mean? But yeah, that's the
Do
problem
you
with like
hedge
trading
when you see
fractals.
something like that, or do you just
No, I usually don't hedge. I'll either close
mm,
it. It's really hard for me to change biases like that fast. It's really hard because because I won't take the position if I won't have conviction in it. But then if I find a reason to trade the opposite direction, because I already had conviction in the original, and it makes it difficult, to want to do that.
Yes.
To be dynamic in that fashion is a bit difficult because then it counteracts like why I took the first position in the first place.
I only feel like that when I'm counter trend, when I'm playing reversal, when I'm playing with the trend, it's much easier, even though I see like LGC can just be a CBOS to continue lower. That's kind of like
Yeah. That's why, like, for the most part, I want to trade sweeps and then transitions of sweeps. Right, obviously it's the H4, right? But I want to see like these types of models. Like, I want to be a lot more selective with what I want to trade. Like for the most part now, I mainly trade like sweeps.
yeah, this has a lot of higher win rate
Yeah, because by
when there's a
default, like,
sweep back in your
mhm.
transition. Yeah.
Yeah, because if there's a sweep and then there's a transition and then there's momentum, like that's kind of like the bread and butter. Like that's probably my best setup. It's CBOS, dual sweep, momentum, and then POI. It's like the best setup that
So the
I've probably ever had.
CBOS is your sweep, basically. That's what you're saying.
This the sweep is after the CBOS
Yeah.
because you need a TBOS to sweep.
But the CBOS can also be some sort of sweep, but you also want an internal sweep,
I mean, if you
like
have a dual
what we're
sweep,
seeing right
right,
now.
that's a CBOS. But the sweep happened. Maybe you can probably not confirm it until this momentum comes into play. But this is required to be a sweep, and the prerequisite is always a CBOS. CBOS transition, maybe sweep, but not. That doesn't necessarily mean that all CBOSs are sweeps either. That's what I'm saying. Like the CBOS is like a prereq, right? Like this is a reversal sweep, so obviously it'd be a full BOS, whereas the CBOS is like here. And that could technically be a sweep too, right? Because by default, the CBOS,
Yes.
is what solidifies the range. So it technically could be, but I'm saying I'm talking about a sweep as in like the tradable model. Because obviously maybe not every CBOS I can trade. That's what I'm trying to refer to as a sweep.
Yeah, 100%. CBOS is just
Mm-hmm.
CBOS, but sometimes it can also be the sweep.
Yeah, exactly. So CBOS and then full BOS, but then obviously with the full BOS, for the reversal to occur, you would need not just the internal transition, you would need, right, additional transition because this is a reversal. So
Love it.
CBOS, full BOS, yeah. But yeah, see, like with the CBOS, you don't really need every single transition because you're relying on the continuation of the external. But the full BOS requires a little bit more, not just the internal, this too. And then if you have another internal, then that makes a high probability. Like that would have been like a really good swing if I was watching this. Like let's say
You
trading.
always only look for the trade in 2 hours into the session because after that there's less conviction in the setup, or is it just your personal preference?
Time of day, bro, is very like there is no perfect time to trade. There's like all there is with time is the amount of volatility that is in the market on average, right? And obviously you want to trade when the market's open because that's when big money comes into the picture, right? But that doesn't necessarily mean that
It's
the
a
only
true
setups are
move
gonna
though.
be sure. Like, have you never seen a move come into fruition like 2 hours before the new day open?
Yeah, so when you're asleep or something, when everything is dead.
Yeah, exactly, bro. Because the rules cannot like that rule cannot be 100% because trading's not that easy. Like it's not responsible to say that the best moves only happen during overlap. You know what I mean? It's not that's not responsible to say because that would imply that the only if the only good moves are during that, then that means that any other time during the day or any other time during New York session, you would not see a good setup. Like there's been many times, bro. Let's see, we could probably even scope some out.
So why
But
is
on
this a thing?
average,
This timing.
because that's when big money comes into the picture. That's when offices open. That's when on average that's like an it's like an average thing. It's not an absolute thing. Like this sweep occurred, okay, 9 a.m. This big move occurred 11 a.m., 12 p.m. was FOMC, right? It's FOMC. 7 a.m. But the real move cost 7 a.m. before. Yeah, so on average you do see like these moves occurring, but like you see here, this move on AUDUSD occurred at 4 in the morning, but that's like mid London. You know what I mean? That's not New York Open, London Open. This 10 a.m. This is right at the closure of overlap. You know what I mean? So the moves will vary when they give you, this is at 7 a.m. right at New York Open. This is at 6 p.m. Asia session. So like you can't say that it's like you can't say that the best moves only happen at X times. But on average, you will see better moves when these either the sessions are overlapping or at the session opens. That's usually best case. It depends though, because on AU you could probably see some moves in Asia session, whereas like an EUGU you might not see as many, or there'd be a lot less consistent. But obviously with AUNU during Asia session, you could have a little bit of a better odd to see a decent Asia move, right? Like with UJ, like majority of the best moves on average have happened during Asia session for UJ, which is weird. You know what I mean? So maybe with indices, that could be a little bit more of an absolute rule, especially like NAS SPX, because majority of their volume is during New York session or like New York Open or New York Stock Exchange Open, sorry. But it's dependent. It's very dependent on the asset and or the cross.
So it's more of a personal preference because we can't sit 24 hours in front of the chart, so we're gonna sit when the moves like occur
Yeah,
sometimes.
it depends on your discipline at that point. Because like maybe some people are able to, because like now I'm very comfortable with just looking at the charts and not taking a trade. You know what I mean? Like I'm very comfortable doing that now. So I can look at this stuff during Asia session. You know what I mean? Maybe I won't look at EUGU because I know like I probably won't see a good quality move, but like during Asia session, I might look at AUNU, potentially UJ, but UJ's just been stupid for like the past like couple of weeks, months. Um, whereas then with now, like I'll look at that for Asia session, and then okay, London comes around, then maybe I'll look at EUGU from the transition of the of Asia to London, which is like that H4 closure to London Open. That's like a good transitionary period for like EUGU, and then I'll go to sleep. And then if I wake up for New York session, then I'll look at EUGU, potentially UCAD. You know what I mean? Like I just built a routine. But most people can't look at charts for that long. You know what I mean? Without wanting to take positions all the time.
Thank you.
Yeah. And then it also depends on how much you keep up with like price action and stuff, how much you can remember. Like if we're approaching a very important low or high on a higher time frame, then I want to maybe be attentive to that pair internally to see if there's a move that will get me there because I can see that move on a higher time frame. But it's very that's more so um dependent on the person and your patience and your discipline and all that. But hey, that's also why I'm trying to build these fucking scanners so I don't have to look at the charts and I just get I just get the alert. You know what I mean? But yeah, guys, do we have any case studies today? Anything? What have you guys been up to over the past couple of weeks? You guys can see this probably. It's probably big enough, right? so I don't have to open every single chart. We can start here. That's a sweep. I like with these scenarios here, like I want to trade this. I want to trade that into here. Once that's occurred, it's a bit difficult because although this is a reversal, there's a dual sweep. So that's why I want to trade. Like this is probably a perfect Fibonacci here. But the problem here with me wanting to long is this, like, bro, nothing has given me more PTSD in my life other than trying to buy big bearish candles. Nothing has ever provided me bigger losses in my life. And so that's why momentum has become a big thing for me. You know what I mean? Because if I see big candles to one direction, I probably want to follow that same direction because momentum is intent. You know what I mean? So the only thing that would offset that is like disruption. You know? Yeah, see, like this is also no. Like this SD is irrelevant, bro. This is you're thinking this think of this as like level 3, level 4, and think of this as level 1 or level 0. You're misreading the level 2, which is that this is just a pullback. So yes, you can see that there's a SD here. Sure, but I have not seen any low that created a high be taken yet. I have not seen those be taken yet. So it's not disruption from a level that's relevant to this move. Yeah, you see what I mean? Like this ended up coming back. I mean, this is not the ideal buy to sell, but it is a buy to sell. And you can see that from here, like maybe there's a transition, and then this would be like what I would aim for to want to go lower. And now this is just not it for me. Right. This is not it for me. Why? Because we failed to break a high, we failed to break a low. This is no man's land. So even if this works, it would be because of external direction. But from a timing perspective, there's no man's land. Where would the no man's land be offsetted? I think it would have to be after this break. But then the tradable position, may not be there. But yeah, like the only way I would have taken this trade is if you had the dual sweep. The dual sweep, and then maybe if you want to do the engulfing, like implied sweep type of trade, maybe. But no, I just like trying to take this type of
Are you
position will lead to a
considering
lot
this
of
got
losses.
lucky?
Yeah, I would consider that more luck. Because that type of trade would probably lose a lot if you were to retake it all the time. Because of the uncertainty of no man's land. So unless every single time the external is like, bailing you out, then this could lead to a lot of losses. You just want alignment between the external and the internal. But the internal is dependent, obviously, on internal structure. You know what I mean? So if there is nothing to align because there's no man's land, then that's an alignment with this. But this kind of bailed them out. And like when people want to ask for like a solution to this, like, bro, like you're on M15? Okay. Get off of M1, brother. Get off of M1. Get off of M1. Just you wanna play M1? Okay, trade M5 trends. M15 targets. Like that's really the only solution to that. How's your Bitcoin thing doing?
It's good actually, it's fine.
No, it's not. No, it's not.
Slowly
You see,
going
like
down.
when I see something like this, like I usually like just bail out. Like I'm like, bro, my move should have already happened if it was gonna work. That's usually what I do.
It's
Like
probably I'm just gonna
up
close
the
it in 1 hour. I don't know.
yeah. You should have like a I don't know. I've never put like a time
So
on it.
what do you do? Like this is stalling and
Oh
doing
no,
nothing.
I either go break like if I'm like entered here, I break even. And
It's mostly the hours. It's the
I'm like at that
hours.
point, I don't know how hours work on Bitcoin, bro. So
Nah, it's dead in these hours. Saturday is good though.
Whoa. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 7, 12. Okay, this is literally that POI that I think my scanner or my indicator pointed out last night. Mm. Yeah, you see, like I know the result to this, so like this is good. This is what I mean by alignment. Like the this is obviously bearish. There's a very clear buy to sell. Internally, right? This is bullish, but you have to focus on any type of low that creates a high, right? Or you want to see, for example, or I'm sorry, you want to focus on any lows or highs that create lows internally, like this. So obviously, if that breaks, then the real like conservative position is if this breaks, then that's structural disruption based on the pullback, but it's a continuation of the external. But the advantage here is that we swept this. So obviously that's not the pullback high, but so obviously you still have to assume this is going to go higher, but the momentum going upwards is very slow. So once you see a high momentum bearish move, I think it's worth it. I think it's worth it. Now the problem here is like where you put your stop is if you define this as your invalidation or this, because obviously the conservative, very conservative is here, but I wouldn't do that because if this breaks, then that's LGC, which would mean upward momentum. So it's now a question of whether you put your validation here. The engulfing helps too. The engulfing helps. I don't think that's why you showed me this picture, the engulfing. Yeah. Mm-hmm. So now the question is, in this type of scenario, like where do you try your stop if you do? But yeah, but that's very good. Oh, okay. So because the problem is here is like, let me see. Did this break? Yeah, so it did. Because the problem here is like you could see this take a partial, but you can't really put your break even yet because this is not a solidified point based on this time frame, and that's M1 already at that. Like the solidified point is still here. So it's until we see this that I can move my stop here. But then, by that time it's already about to hit target. But this is good. The best thing about this is like you're seeing how the transition leads to this. This is what I mean, bro. Why I don't like to this is what I mean by like with the Bitcoin situation. Like I don't want to see this because it shows my timing isn't right. Whereas if the timing is right, you see this. You know what I mean?
In this trade, can he extend the target all the way to the?
You can, but there's complications to that. There's complications to that because you're not opening the door to different things that can conflict. You're not opening the door um for other levels of structure to now start to intervene with the scenario. What does that mean? Like you broke this, yeah, but that's now a CBOS of this. So now you're inviting a different addition of potential problems because now this breaks. Okay, do you now define that as high low continuation, or do you assume that to now be the sell to buy reaction and bullish move? It's a different scenario now. You know what I mean? Whereas this model here is very clear. this is now a lot more confusing because if you want to hold and potentially want to see this go lower, you've already partialed out, but now you're risking all of this profit over this more profit, which could be maybe 1-to-1. But do you really want to do that if there's also the possibility that that happens, right? And then obviously you can see you can hedge, you know what I mean? But then that also invites potential loss here. And then from here, that once this breaks and that scenario to happen, then that's now a new scenario, bro, because now this can happen or this can happen. So you really want to look at it from cause and effect, and then not necessarily like after that, because then you're adding, like, instead of it being cause and effect, you're adding cause, multi-dimensional cause, multi-dimensional effect. So it's like cause squared, effect squared, and then that the numbers just completely are much more different. You know what I mean? Like the numbers are completely different. Like let's say out of the cause, there's maybe 2 scenarios that can happen, and then with the effect, there's 2 scenarios that can happen. Then obviously, if it's squared, then obviously that's 4 and 4, so that's 8. So that's two times the amount of potential scenarios, and I'm lowballing that. Like really, there's like a whole lot more stuff going on than just this. Because with this cause, you could either have 1, you could have 2, or you can have 3 scenarios minimum, right? Outcomes. So then it would be numbers get fucked, bro. Pretty much is what I'm trying to tell you. If you're thinking of probability and
We'll take the
deterministic.
TP and dip, I guess.
Yeah. Because that's what that's the goal. That's like the effect. That's like the reason why we're taking this position is to go here. You know what I mean? Because bro, there's this quote that like has stuck with me over the years where it's like, if a trade is pretty enough to screenshot, you should probably close it. Like, bro, how many times have you taken a
Look at
screenshot of a
Bitcoin.
nice trade? Yeah, how many times have you taken a trade of okay, nice. How many times have you seen a scenario give you like uh a very pretty scenario, and you screenshot it and you screenshot your position and you're up like XYZ, and then it reverses?
It
But yeah, what
happens,
is this
but
looking
especially
like?
if your target is like scalp position, like in the bigger target.
Mm-hmm.
No.
Mm-hmm. You see, like, this is what I call a change of character, almost. If you start to see a little bit more speed. But yeah, I mean, I hope it works. This is still like there. Like, I think this was your trade, right?
Yeah.
That's good because this is alignment with
Yes.
dual sweep.
The 5, yeah. 5 minute.
Do you use Bybit?
Yeah, I don't really like it, but
The
I
reason why I
took
like
it.
Vantage, bro, is Vantage has a perpetual account, which is like zero spread. It's like trading a future, basically. Watch is just reversed. I still don't like it for your information. Like for my like, I still don't like it, but I mean, I hope it works because like I would have wanted to see this already roll over, kind of like this scenario here, right? But yeah, let's move on. Okay, okay. I This is aggressive, but I like it just because of the engulfing. The only reason, like, if this works out, like this is just great. Yeah, like this is why I put so much faith in engulfing, just because of what the engulfing represents from a momentum standpoint. Intention. So like engulfing, equal highs. I don't think that this external sweep is that much important. It's not really that important in the scenario. It's more so the equal highs being swept, engulfing, kind of implying distribution, but it's showing the intention that it wants to do something. So yeah, good. I would have partialed here, but now it's like because you're focused on a smaller time frame here, it's like this transition is a reversal. So this transition is meant for this target. Anything after that, you're opening up more scenarios to potentially occur. That's why, like after that, this would be like the partial. And then like you could see the possibility of a transition or a failed transition, and then that would be like a conservative entry. Yeah, because see, this is technically structural disruption here. This is structural disruption. So like, yeah, you can see that this POI is there. But I don't know. I don't like the continuation yet, unless like this would have swept. If the high would have swept, then I would have potentially liked to see that before I assume sells. But the entry is good. Like the entry makes sense. But yeah, so here, so I'm assuming what this broke even after.
What?
This is broke even after.
No, it's still going. It's in profit, but prior to this position, I took a loss on the previous high right there because I thought it was unwillingness. This is another that you're watching right now.
Okay, this is another one. Yeah. But yeah, this one I just don't like. I would have wanted to see a sweep because this is still active. The structural disruption is still active. I see the sweep internally. I see it. Yeah, I see the sweep. I would have liked to see this maybe with a bit more momentum, but I think this is enough for a reaction. But like I said, I want to see that high be swept because that would offset the potential structural disruption. You see, like, okay, this would have been like the ideal entry, like this. Because I don't want to take an entry here because obviously this internal move is in play, and I want to see this instead. You know what I mean? I want to see this be swept and then maybe like a dual sweep. But once this breaks, then obviously that's not unwillingness here to go higher. So if we now see the transition here, then that's more ideal. Why? Because if we break this, then there's high momentum here. So I wouldn't want to sell automatically, and there is no clear buy to sell. So if we see the transition and then this mitigation, then obviously we partial here and then we just hold for the best, you know. Yeah, you see what I mean?
Yep.
Mm-hmm.
At the
So
end,
I
this one I
think
closed before. This one I closed right here.
no. You should. That's like the perfect entry spot. You know what I mean?
Yeah, I know, but it was approaching 11, and usually I get crazy slippage in the position. So I closed it before, and
Slippage
next
or
morning I
spread?
wake up, I'm like, spread, sorry, spread. And next morning I'm waking up and see all this one. So yeah.
Yeah, like what you got to think about too is like whenever you think about holding, think about like the duration of the setup. Like this is days, you know what I mean? So if there's days for the setup to come into play, then it might take days for it to also come into fruition. I call that scale.
Yeah, you're right.
Mhm. Well, yeah, fuck, that's actually like
Yeah,
the
but
perfect.
also there's one.
Mm.
Yeah, there's also one problem that I actually take position like zone. If you see right here taking a position wait, taking a position here, I'm taking, but if I wait a little bit longer, I get a cleaner entry, like here or even here. Is that I
Yes,
have this
yes.
FOMO that, in my opinion, I see too many positions. Sometimes they just go without me waiting. So I just
Mm-hmm.
take the micro pullback of it, and then I have to deal with this one.
Mm-hmm.
And it's tricky mentally.
Yeah, it just depends on how many time frames you're looking at. Because if you're looking at above M15 and you're also looking at like M1, that's a lot of levels.
I'm looking to
That's what the,
everything. Yeah.
yeah, it's a lot of level. You're talking about like 5, 6 levels at that point when you're looking at M15, M1. Like just to, we can just look at it now. It's like, uh, when was this?
This was Monday, I believe.
Yeah. Monday. Like if, like give or take, your bias came from here, right? The structural disruption.
Oh, well, it depends. Yeah, kind of. But my bias, I think, came from the daily, from this from this swept right here. So I thought
Mhm.
this is going to be the next target.
Yeah, so you're already referencing 5 levels. But the problem is like this doesn't consider level zero. Level zero is like all the internal of level one. So this is you're already talking about 6 levels of structure. You see what I mean?
Yeah,
So that's what makes it complicated because in order to see level three, level four give you the move, you need to see level one or level two potentially fail to give you a pullback. But then you need to see level one fail, continue, and then fail again so that it now favors the level three. Does that make sense? Like you need
yeah,
to see level one fail bullish to bearish to then bullish again, and then that would give you like the scenario with level three. So that's what makes it complicated because knowing how to differentiate the levels is like pretty hard.
yeah. What makes it also complicated is that you told one time that when you take a position, there's always something that's against you, and that's totally
Has to.
true.
It has to, yeah.
Yeah, because if you look also the Open, I took right about I think the Open of New York. I got like momentum coming up on my entry point, and I was like, okay, maybe this one,
Mm-hmm.
is not going to
Here.
it's not going down. Yeah,
Mm-hmm.
I think yeah, was there. If you see the momentum coming up, I'm like, okay, it's just manipulation, V manipulation.
Mm-hmm. And if you go to M1, bro, this gets even more complicated. Like, I don't have it looking back that many. It's too much data. I could probably add it. Let me see. I think 5,000 is the most I can do. So you see that this is that daily sweep, right? Yeah, I think it is. This is that daily sweep. That's 7 levels of structure if you're only referencing M1. You know what I mean? So you're looking at 6, 7 levels of structure. That's what makes it a little complex. By little, I mean a lot.
You don't look at all the levels.
No, 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 no. It's difficult, bro. But I think the next like after I finish my POIs indicator, I'm really gonna try to hone in on using solidified points to give me the to try to help me with figuring out direction in terms of what levels need to transition because it's just running a bunch of simulations. I just got to figure out how to ask it. You know what I mean? Like first of all, I would have to dictate or have to determine what do I consider to be approach and move. Like if I consider this to be a continuation, like this up, why do I consider that a continuation? What levels of structure dictate that to be a continuation? And then what transitions on average are required to see that transition? You know what I mean? Because then on M15, it's a little different. Because then if I consider this to be a continuation, if I see this break here, what would I have to consider this, or how do I consider this a continuation to then aim for here? And then how do I make this consistently the low that I want to look for? Because on M5 is level 2, but on M15, it's level 2 too. It's not, and H1 is not. It's nothing. You know what I mean? And it's very complicated because I'm talking about fuck, bro. I'm talking about like I think after I did all the research, it was like 13 levels of structure on most FX pairs, which is crazy considering like all the data, right? You know what I mean? But yeah, it's crazy because there's so many levels in play all the time. You could see here solidified points. You know what I mean? The just how many points there are, and then the scalability going from level 2 to level 3 to level 4, back to level 2 after the level 3 breaks, and like yeah, it's just it's a lot. It's a lot. You know what I mean? But yeah, that's a pretty big task. And like this isn't even a solidified point yet because level 2 hasn't broken, I think. Right? And then there still may be holes in like the logic of the solidified points here. Because if I change the indicator, then it changes all the results in the logic of wanting to find the combinations. You know what I mean? But yeah, guys, do you have any more case studies? Any more questions?
Yeah, I'll send one.
But yeah, like I said, right now the only things that I know I can work on is like the scanner and like the just honing down all the levels so I can figure out like the sequences that would dictate a bullish to bearish transition, bearish to bullish transition, and then narrow those down to models. But yeah, it's complicated.
In the DC.
Okay, much better. I still think this is much better in terms of the execution, but I still think you're kind of forcing it here, bro. For example, this is a very clear sweep. Obviously, you want to then pursue something to the downside. But we swept here too, and we have structural disruption. So we have structural disruption, so therefore we would kind of want to assume this to go higher, but then that's kind of offsetted by this. So that potentially offsets that. So this is better because there's a little bit more of a clear directional bias here. But the problem with this wanting to carry this is that this shouldn't be sweeping anymore. But there's also no clear POI here. So I don't like the scenario at all. Like I just think it's not clear in terms of this because this whenever I see it, I see myself trying to overanalyze things and stuff like that. More than likely, like, bro, there's probably like low momentum. You know what I mean? Which would dictate this to be a buy to sell to go to the upside because we're still sweeping here potentially. So I don't like this scenario at all. Seems very forced. Yeah, seems very forced. So now it's like if I see the break, then or I see structural disruption here, now I would want to be bearish because now we've swept the high. Because that would then imply that the failed flag is here. And then if the failed flag is there, then you're good. Because this could be CBOS there. But yeah, bro, I don't know. I think you're forcing this stuff, bro. I don't know if this is a rule thing. I don't know if you're trying to force scenarios that are not there. I don't know if you're only looking at one asset and then you're kind of just trying to force setups into that one asset. Like it could be a lot. It could be a lot of issues, bro. Oh, nice. It's working. Nice, nice, nice. Working.
Brother, I own this shit.
Hey, don't say that,
I
bro. Don't say that yet. Don't say that yet. Don't say
yeah,
that yet.
it's gonna
It's
yeah.
gonna reverse, bro. It's gonna reverse.
Yeah, it's gonna reverse take all the liquidity with me. I sent one in the Discord when I had
Oh
in
yeah, yeah.
Bitcoin, like
This is
yeah.
moving. What? Are you short here on gold? Gold moving nicely.
Yeah, it was the second case study I showed you.
Oh, okay, 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 okay. Oh, I see, I see. That was here.
Yeah.
The entry's really good, just because of the engulfing. Like just these big candles. Like, is that what gave it away? Is it the big candle?
Yeah, as the beacon. Actually, I went short here, like here. Something was on willingness.
Nah,
You
it's too
know,
too early. Too
kind
early.
of
Yeah.
here, stopped me
Mm-hmm.
here, and then I was like, after seeing this one, I could not resist to re-entry.
Mm-hmm. If you're looking for the reversal, bro, you have to not focus on these breaks. You have to focus on this break when you're looking for the reversal. Because
Yeah.
it's only until you see there's something after the high is broken on a transition from bullish to bearish. That's when it usually gives something. And then obviously the engulfing is like everything there.
I mean, this one are not really my trades, to be honest. I mean,
Mm-hmm.
I
It's a good
try to prefer to
distribution.
not.
Mm-hmm.
Yeah, but I try to not stay on below 5 minutes, 3 minutes time frame. Like it gets too messy, and for me, it's not actually worth it. But on Friday, I figured out that maybe it's better I take this kind of position because looking for me, I actually take position 10 minutes, 15 minutes, and going a bit more further. But I figured out maybe on Friday, I'm just sticking to scalp a little bit and stop.
Mm-hmm. Mm-hmm. But yeah, who knows? Maybe I don't know. I probably close that by the end of the week. I'm by the end of the daily closure because it's what 2 hours away. So who knows? And it did come into the buy to sell here. So let me see if I picked it up on any scale. No. No. Yes, it did it. Yeah, this has a lot of work to do. I still need to do a lot of work on this. Sell to buy, that worked out. Cool. Ah, yeah, let's see this case study. If this wants to load, yo, what the hell? Okay, my bad. I think we have some internet problems here. Did I lose everybody? Yeah, did I lose everybody? Let's see, I think we did. Yeah, cool. I just what is this that he sent me? This is probably a good time to end it anyway. But yeah, guys, I think that's it for today. Yeah, I'll start case studies probably back next week. And yeah, we'll probably go from there.